Hi guys and welcome to the trading show. This week we are gonna talk about
Markets, rally in coffee. Our portfolio, good week for Mini S&P 500. Tip of the week, should I buy the worst stocks? And the weekly rollovers.
and if you are interested in systematic trading, then subscribe to our channel. I am Francesco Placci, Head of R&D at Unger Academy. Let's start from the market overview to see together what happened during the week.
During this week, all the equity indexes have shown positive returns. Both the Nasdaq and the SP 500 have reached their historical heights this Friday. The bond sector has remained almost stable, but in medium-long term, the bullish trend started last May remains pretty strong. Metals, with the exception of copper, remain slightly negative. We see here the platinum in particular that is continuing its decline. Strong recovery for the entire energy sector, in particular the natural gas, which is obtaining very high returns in the short and long term. Meats as well as currencies remain rather unchanged, but what I would like to highlight today are the soft markets. In particular, the future of coffee that has seen a sharp rise in prices. We see it well above 15% with respect to last Friday. Finally, the Bitcoin that slightly recovers the downtrend of recent weeks, but still remain near the level around the support of about $31,000. Let's now take a look at the volatility term structure. We see that this Monday there was an increase in all volatility indices, but without reaching any backwardation. The following day, on Tuesday, there was a strong recovery in the market with a consequent decrease in volatility that brings us to the levels similar to those we have seen at the end of the last week. Let's finally see in more detail the spike on Monday, in which the VIX has reached the level of 25 before decreasing to 17.
After seeing some key statistics on financial markets and given the fact that automated traders also use this data to build their trading strategies, as usual, we will now take a look at our portfolio of trading strategies to see how systems have reacted to current market conditions.
Hi everyone, from Alessandro Damos and welcome to this new appointment with the analysis of our portfolio. This week I want to show you two strategies on the Mini SP 500 future that has performed quite well during 2021, continuing its good performance that occurred also in 2020. It is maybe due because of the high volatility generated on this market that has allowed also strategies like this one that is a breakout strategy that many will laugh on this because the Mini SP 500 future has mostly a mean reverting approach, and so it tends to rebound on important levels, while we have seen that thanks to this volatility generated during the last years, also trend following strategies like this one may perform really well. We can see from the strategy performance report the equity curve that, as said, is really good during the last years. In this case we have set 300 days, so it is around 1 year one trading year, we can say. And so this is the equity line. I want to show you also the average trade sheet, and we can see that the short side has a negative average trade, also a big number, we can say, over $100, because we know that on this market it's pretty difficult to find something good on this side, while on the long side, fortunately, it is enough to generate profits, and it was really good in exploiting the bullish bias of this market. Okay, now let's move to the next strategy that this time we can consider it a bias strategy, because it enters only on Fridays, based on the weekly trend that has occurred until Friday, of course, so from we can say Monday to Thursday. And on this basis it will enter both long and short, or maybe it will not enter at all. And we can see from the strategy performance report that this particular idea, we can say that it is quite not recursive, during the last year has performed really well. We can see the equity curve here generating a net profit of over $10,000. So quite we are very happy. This is the equity curve close to close. And we can see that the strategy in just over 40 trades has generated over $10,000. We can see it also here in the 100 period analysis. And if we switch to the total trade analysis, we can see that the average trade is really high if we think that this particular system is an intraday one, so it closes the position at the end of the session, so has just little time to exploit movements of the market. But the most beautiful thing of this strategy is that both equity curves, long and short, helps the final equity curve, we can say, because here we can see the equity curve long that had a bad period, and during this bad period the short side was performing really well. And so, as we said before, if we compare this equity curve short with the buy and hold of the underlying, we understand that this situation is really exceptional, because the short side is really difficult on this market.
Hello everyone, and welcome from Andrea Unger. Today we will try to go more in the details with the topic we have already seen in the previous two episodes, and in particular we will see if shortening the time horizon of the portfolio and rebalancing it with a weekly frequency, if it's worth to buy the worst stocks of the latest period. So, unlike the previous time, now we will try to rebalance the portfolio with a weekly frequency instead of a monthly frequency, and we will try to analyze a shorter time horizon to decide which stocks to buy in every rebalance day. So let's start buying the worst stocks, the worst 5 stocks on the Dow Jones Industrial Index average, and here we have analyzed 1 month as a period, and as said previously, the rebalance frequency is weekly. So in this case it seems the strategy is performing better than the index from the return point of view here, but it seems also that the drawdown is much more higher, and this is moreover valid if we consider the crisis periods. So for example, the 2008 and the 2020 with the pandemic period. So now let's change the basket and let's go to the Nasdaq basket with the same exact approach. And in this case, I wouldn't trade at all this strategy just because the return is worse than just keeping into the portfolio the Nasdaq index. Even if it's not possible to buy the Nasdaq index, you could buy the QQQ ETF, for example. But the main problem is that the drawdown too is higher than the benchmarks one. And in fact, here you can see during the dot-com bubble period here, the drawdown has reached higher peaks if compared to the index. So this is not possible. This is not positive as fact, because the strategy doesn't have a particular edge if compared to the benchmark. Now let's restrict also the time analysis, the period analysis for what regards the peaking. So we will analyze the worst stocks, but considered on a shorter amount of time, even if the portfolio balance frequency is still the same. So here we have the equity on the Dow Jones Industrial Average. It seems a positive equity, and I think it's better than the benchmark. Of course, you can see the black line is higher, in fact, than the red line. But we have to consider the drawdown too, and the drawdown in this case is significantly higher if compared to the benchmarks one. So I wouldn't trade this strategy anyway, or I would find in any case something to mitigate a little bit the drawdown. And as last, we will see the Nasdaq. So the same approach we have used now on the Dow, we will see it on the Nasdaq. It seems extremely positive. In fact, the return in all this period would have been 51,000%. So of course it's extremely positive. The CAGR, so the compounded annual growth return, is extremely high, but we have to consider also the drawdown, and also the drawdown in this case is quite high. In fact, is 88%. So all in all, I would trade this strategy, I think, but I would try to find a way to mitigate this huge drawdown, because it's extremely risky, this strategy. In fact, I think nobody may afford a drawdown of the 88%. So of course I would try to diversify with other approaches, or I would try to find a set of rules that would mitigate this incredibly high drawdown.
Let's have a quick look to our rollover calendar. We have already rolled the crude oil future, and next week we must roll RBOB gasoline, natural gas and heating oil. Next week we should roll also metal contracts that have their first notice day at the end of the next week. Last but not least, we will roll also Bitcoin future and Ether future.
I hope you enjoyed this video, and if you want to learn more about the trading method we at the Unger Academy use and teach our students, not to miss out on reading Andrea Unger's new book. It's called The Unger Method, the winning strategy of the four-time world trading champion. And in it, Andrea explains step by step the trading method that let him win 4 World Cup trading championships, and that you too can use to improve your approach to the markets and achieve your trading goals. And the greatest thing is that now you can grab it for free by just paying for shipping and handling. In the book there is also a rich bonus area with links to videos reserved only for those who get the book. Don't miss the chance to take your trading to the next level. Click the link in this video and get your free copy of the Unger method now. You pay only shipping and handling.